Welcome, guys, to Parvez Trade. And on this episode, I want to talk about. I just want to follow up on my previous video I made about Bitcoin and about the challenges that lie ahead with the transaction cost uh, in transacting in Bitcoin. And I think so. I saw this recent video where basically it was a debate, to put it simply, that was between two guys. One guy was pro Bitcoin, another guy was pro gold. And they were talking about how, the guy that was pro gold, he was talking about how Bitcoin intrinsic value is zero and it will return to its intrinsic value eventually. And the guy that was pro Bitcoin was talking about how gold is hard to transport and how it's a thing of the past, how gold does not have that, how do you put it? It does not have that transactional uh, convenience, right? Because you can't transport large amounts of gold and all that. And I think, look, let's get something out of the way. First of all, Bitcoin is a it's a way to store wealth, store value, no doubt, right? Bitcoin is a good way to store value because there is more demand for Bitcoin than there is supply. And that's not going to change anytime soon because there is an upper limit, which is 21 million Bitcoin that can be mined. And right now we have around 19 million Bitcoin in circulation. And so when the upper limit of 21 million Bitcoin is reached, likely by 2041, and then you'll have basically a limited supply. And so the current rise of the Bitcoin price is all to do with demand, right? People who were into Bitcoin are buying more, and who weren't into Bitcoin are now getting into Bitcoin. So the demand is what's driving up the price of Bitcoin, and especially the institutional investors, the big banks. Now that Trump is coming in, he wants to make it an institutional investment vehicle. Big banks with their big wallets, they can buy up and drive up the price of Bitcoin even further. So the demand is what's increasing the current price of Bitcoin. It's not because it's all of a sudden become a method of transaction. Okay. There is very few places around the world that will accept Bitcoin as a way of payment. I mean, yeah, you can buy an real estate asset in Dubai for Bitcoin, for example. There are examples, but a wide scale use of Bitcoin is still not anywhere near, right? And no matter what Trump says about Bitcoin and how much approval he gives, he will try to protect US dollar, right? If he's so for pro Bitcoin, why isn't he getting rid of the US dollar and making Bitcoin the, you know, means of transaction for everyone in USA, right? If you think about it, I mean, El Salvador is using Bitcoin as government money approved for any transaction inside El Salvador. Why isn't Trump doing that? If he likes Bitcoin so much, why still holding on to the US dollar? And I think you have to understand what's going on here, which is that if you look at how the Bitcoin mathematical model has been set up, it, as more and more people transact in Bitcoin, when the upper limit of 21 million is reached, as more and more people transact in Bitcoin, and miners can only receive reward in transaction fees and not in Bitcoin. And so their proof of work verification, the only reward they get is the transaction fee. So 21 million Bitcoin is rich. The miners no longer get their reward for Bitcoin, right? And congestion in the system is increasing. More and more transactions are happening, right? And so the miners need to get a higher and higher transaction fee. And also, as the congestion increases, they have to increase their hash rate. So the energy hash rate is basically the computational power of the miners' computers. and they have to increase the hash rate, the computational power to solve more complex equations to deal with the increasing congestion. And as they increase their hash rate, the energy intensity of the mines, the Bitcoin transaction mines, right? The energy intensity will increase. So the cost of running these Bitcoin mines will increase. And a point will be reached when the energy cost, just the operational cost of running a Bitcoin, will equal the transaction cost, if you think about it. And then, so the miners with the highest hash rate are located in USA. Okay. The USA miners, they dominate the Bitcoin mining and proof of work verification industry, and they own around 40 to 60% of the Bitcoin mining industry. So it's not a decentralized in the sense that most of the Bitcoin mining is centralized in USA. So it's not as decentralized as you think. Over half of the Bitcoin mining and verification happens inside USA. That's where the miners are located right now. So you have basically you're basically dependent on the energy cost of running Bitcoin mines in USA. And will the energy cost come down in USA? I made a video about this in my one of my previous episodes where I talked about how the USA power markets, electricity markets are getting liberalized more and more. And in any market, once you convert it from a state run to a private model, price never goes down, if you think about it, right? It always goes up. Okay, because I mean, if it was a genuinely free capital market, yes, price would go down. But what you have is a mixture of capitalism, a mixture of free market, and a mixture of oligopolies, a bunch of big corporations, big companies, big mines dominating the market and setting the price. They get to maximize their profit by increasing the price. And that's what's happening in the power industry in the USA. As the power markets are getting more and more liberalized in USA, more and more of the big utility companies are dominating the markets, and they get to set the power price by manipulating the supply of electricity at critical times. And a point will be reached because my prediction is power prices in USA will go up. They will not go down, regardless of how much renewable you add to the system. Just the investment in the transmission grid and electricity grid will not happen anytime soon. The battery storage systems, look, most of America's renewable energy comes from midland America, the states in the middle of America. Yes, a lot of Bitcoin mines are situated in those states with high renewable energy capacity. But like we know, renewable energy is transient, it's intermittent, so you have to store it in batteries. And battery investment is going on in those states with renewable energy, no doubt. But a point will be reached when the cost of operating a Bitcoin will reach the transaction cost of so the money, the revenue these Bitcoin mines will generate from the transaction fees after the Bitcoin 21 million cap is reached. They're not getting any more Bitcoins. They're only going to get money from the transaction fees. And so the money that will be the revenue that will be generated from the transaction fees that will be equal to their operating costs, their energy costs mainly. And at that point, they can continue running their businesses or hope for the transaction fees to increase so that they can run at a profit. But what will happen is, like I talked about this in the previous video, as the transaction fees will go up in using transacting in Bitcoin, there will a point will be reached where people will reduce the amount of transactions they do in Bitcoin. Okay, as the transaction fees increases, people will do less transaction in Bitcoin. Right, it's just obvious. Okay, and once that maximum transaction fee limit is reached, at which point people will start reducing their transactions on Bitcoin. That will basically be the maximum cap on the profit that can be the revenue that can be generated from Bitcoin mining and transaction verification. And so if energy cost for running that mine then goes above that maximum profit they can reach, then basically those mines will be unprofitable. And once that happens, they'll have to shut down the mines. Well, once they shut down the mines, transaction costs will get higher and higher. As the transaction cost gets higher and higher, even more and more people will reduce their demand of transacting in Bitcoin. As more and more it's like a snowballing effect. More and more people reduce their demand in transacting in Bitcoin, less revenue generated from transaction fees. The mines are becoming less and less profitable, more mines shut down. So then it becomes a snowballing effect where basically people panic and start to get their money out of Bitcoin, right? Because um, yeah, when you have less transaction, when the liquidity in a market, and I talked about this in a previous video, which is that when the liquidity in a market, financial market, goes below a certain level, it takes only a few transactions for massive changes in price. And so when that happens, it will not take too much time for Bitcoin to go from, let's say, 60,000 USD to 10 cents USD. Okay? Because liquidity is an important factor to maintain stability, price stability in a market. And liquidity will be determined by how easy it is to transact. Transaction fees goes up, liquidity will drop. And yeah, so and just putting all that aside, I think people need to understand one more thing, which is that, you know, like going back to the debate I was watching between the pro Bitcoin guy and the pro gold guy, when they talk about it's a reliable way to transact without the hassle from the banks, how gold is harder to transport and all that, which is great and it's true. But I think people are forgetting that 99% of internet traffic flows through what we call undersea cables. So there are these giant undersea cables under the ocean, on the ocean floor, that are basically connecting all our different continents. And 99% of the internet traffic goes through these undersea cables. And at times of war, I mean, you just have to look at the recent example, internet link between uh, Germany and a few other Baltic countries were cut. There was a Chinese ship that was suspected of being the culprit behind it, but yeah, they don't have any proof. So in times of war, it will not be. I mean, even Vladimir Putin is sending out ships to map out the undersea cable network in Atlantic Ocean. So at times of war, cutting those undersea cables will not be that hard as most people think. And so times of crisis, crypto is not going to be the way to make transfers of money because your internet will be down. And I know it's a bit far-fetched idea for a lot of people to think, but you know, crisis times will come. They're okay. We have lived through a very peaceful era the last 100 years, close to 100 years, 80 years. So crisis times are meant to come because it's a pendulum, okay? You have wars, and then there's a superpower, clear superpower, which is USA, and they dominate and maintain your global stability and peace. And then other rising power, USA goes in decline, and then other rising powers challenge their supremacy. And so, in order to find out who's the biggest badass on the street, you need to fight a war. And so, we're reaching that point right now, and the pendulum is swinging back in the crisis mode. Uh, and yeah, so crisis times are coming. And when those undersea cables get cut, your internet will be down. There's very little traffic that you can do with satellite internet. I mean, even satellites are under threat, right? I mean, Elon Musk has Starlink, but that has very limited adoption so far, right? And it's very expensive. And also that can easily come under attack, right? Russia has shown that they can destroy satellites at ease. So if they target, if they really want to bring a major, to put it simply, if China and Russia wants to bring down a major share of the internet offline of the Western world, they can easily destroy some satellites and cut off most of these undersea cables. And yeah, your crypto transaction will take a hit. And so it's not as reliable as most people think. And in those times, if you have a bit of gold, you can still transact. Yes, it will be harder to ship, but it'll still be, you still have it physically in your hand to be able to be used compared to crypto that's in your internet wallet that you can't access because the internet is down. And even if the internet is temporarily up, your crypto transactions will not get priority because there's very limited bandwidth on the system. And so, yeah, I think people, I mean, sure, Bitcoin is a way to trade and make money. That's my opinion. It's a way to store hold for now, store wealth for now. It's a good holder of wealth for now. But I don't think I think the prices will eventually have to come down in the future just because the way the Bitcoin network is set up and the transaction method is set up. I think the prices will drop in the future once the 21 million cap is reached. And if at times of crisis your crypto wallet is completely useless, you can't use it if the internet is down. So I think I know if that sounds like a world that, look, you have to understand like this global adoption of internet is something that's very, very recent. Okay, global use of internet only started around the 1980s. Okay, just think about it. So it's around 30 to 40 years old. And for a lot of the young generations, it seems completely impossible to live in a world without internet. But this global use of this means of communication is a very new system. Okay. And gold has survived through the hard times, through the good times, throughout the history. It has a track record. And like I said, crypto has no intrinsic value. That's still a point of contention, right? And just the way the crypto model is set up, the prices have to come down because it's not an efficient way. The proof of work is so intensive once the transaction volume goes up, it's not gonna be sustainable. The network will break down. The fees have to rise up significantly, at which point the transaction have to drop significantly, at which point the liquidity in the market will drop significantly, at which point it will not take many transactions for the Bitcoin price to go down significantly. And also, yeah, if the internet is down, then your crypto wallet is useless at times of crisis. And on top of that, there's not widespread use of Bitcoin that's happening in most countries around the world. US is not going to give up US dollar to use Bitcoin. China is building their own BRICS currency. There are some countries where you can, yeah, do some transactions in Bitcoin, but that's about it. If you think about it, there's not many places in the world that's going with down the Bitcoin line, unless their entire currency is completely wrecked, like El Salvador, Argentina to some extent. Or if you're trying to attract investment and you don't care where the source of money is, right? Like Dubai. But overall, it, it's not the best way to transact as a because first of all, you can't use it at times of crisis for sure. And that world is coming. That world without internet is coming. And yeah, I think it's a good place to invest your money now, to put your money in right now and get some profit out of it. But after that, yeah, I think the best thing to do would be to move on to some other venture, but not to look at it as a religion to believe in blindly. Just understand the reality of how the Bitcoin model works, the amount of new Bitcoins that can be mined, that amount is getting halved every year, and the transaction fees increase when there is more congestion, when there's more transactions in the system, and the energy intensity increases exponentially to the computational power. To put it simply, if this amount of, if this amount of computational power requires this amount of energy, then if you increase the computational power to this much, yeah, if the model was linear, then you'd increase your energy intensity to by this much. But because there's an exponential correlation, when you increase your hash rate, your computational power of your Bitcoin mines to this much, your energy intensity, energy consumption increases by a significantly higher margin. So every unit increase in computational power increases the energy intensity by several multipliers, not by the same multiplier, by several more multipliers. And so that's why it's not a sustainable system. And also because US's liberalized power markets will not be able to provide enough cheap energy for it anytime soon. So yeah, I think people needs to just be realistic, get in right now, make some money, and get out. Invest it in some physical holder of wealth. Yeah, that's just my personal take on this. Yeah. That's it for today. And yeah, I'll come back tomorrow. We'll talk about something else, something different thing. Good night.